Hey everybody, Economic Ninja here. Hopefully you're doing great. Oh wait, there we go. Let's talk about inflation. Core PCE numbers just came out and it's not good. And you're watching the stock market go up because the stock market has disconnected with reality. It says here, the Fed's favorite core inflation indicator, core PCE, rose 0.3% month over month in January, which was expected, a dip from the 0.4% sequential increase in February, with year over year now rising 3.2%, okay? The headline PCE jumped notably more as expected since it included non-core items like energy and food, right? This rose 0.7% month over month, which also was expected, driving prices up 3.5%. Okay, this is a year over year number, also expected from the 2.8, and it's now the highest since May of 2023, okay? You're seeing the bond market rise because investors are also seeing inflation rise. They're seeing the outlook for inflation is going to be higher. This is not good. This is going to be even more exacerbated by the price of fuel. You'll see in next month's numbers and the month after that. The public is now becoming very concerned. They are severely shortening their spending because of fuel prices. Fuel prices are the #1 driver of the feeling of the economy. Even when prices are really low, people tend to feel good because they have a little more cash, but they are extremely reminded of it when fuel prices rise sharply, quickly, okay? And when those prices stay higher for longer, people start to get panicked. And we are seeing that absolutely right now. Now it says here, the author of the story, this comes out of Zero Hedge, taking a closer look at the headline print shows a surge in non-durable goods, largely the result of soaring gas prices. And I want to remind people, it's not just the gas prices that are going to be going up, it's going to be everything else because of the gas prices going up. Every company, every handyman, construction company, delivery company, they're going to start citing higher gas prices for the reason why they are raising prices in the near future. In the next 4 to 8 weeks, you're going to see this all over the internet. Real quick, I want to remind everyone, I'm closing enrollment to the 2026 Crypto Investor Program. If you want to be a part of it, links down below. You can take a look at it there. Now, what's really, really important, it says here, for those worried about the impact of crude oil's recent surge, it appears somehow that PCE's energy component has already run a lot of the move. Higher prices were met with higher incomes and higher spending, right? Personal income rose 0.6%, double the expected 0.3%. And I'm curious, can you let me know down below, have you seen an increase of that much right here? Personal income rising 0.6%, which is doubled the amount that they expected, 0.3%, in the last month. Type yes or no if you have seen an increase. I'm pretty sure a lot of you are going to say no. And you have to realize that this is some bull crap number that the government wants to come out to make you feel better, because they took a study from a bunch of companies. Hey, are you paying more people? And I think what you're seeing is that there are companies going, yeah, we're paying like 0.6% more because we just brought on like 1 or 2 more people and it costs us a boatload more money for those people. The group didn't get paid more. I think that these numbers are completely skewed, but hey, that's just me. All right, with that being said, thank you so much for watching. The Economic Ninja is out.